Slam Dunk Mortgage Team here, talking about FHA versus conventional loans. And it's essential to understand the difference between the pros and the cons of each to determine which might be your best fit. Here's a breakdown. Okay, now listen, FHA loans were the original OG first-time homebuyer loan, right? They were the only ones out there back in the day. They typically require a 3.5% down payment. They also are a little bit more lenient with your credit scores, and they will accept credit scores down to 580. Now, borrowers with a higher debt-to-income ratio also qualify for an FHA loan because they go to 55% debt-to-income, which is super helpful if you have a little bit higher debt. Also, the rates are typically lower on an FHA loan. Now, FHA loans require upfront and monthly mortgage insurance, which can increase the cost of the loan, and the monthly mortgage insurance is fixed. So no matter what your credit score is, it's going to be the same no matter what. If you have a 700 credit score or a 580 credit score, it's fixed all the time. So this is pretty sexy about FHA. Now, some cons about FHA are the mortgage insurance never goes away, it stays on forever, and they do have a loan limit. So you have to be careful how high you're purchasing, what purchase price you're in, because they have a certain loan limit in different counties, okay? Now, conventional loan also has a 3% down program if you're a first-time home buyer, 5% down if you're not a first-time home buyer. They have no mortgage insurance if you put 20% down, and once you get to the 20% equity, your mortgage insurance can fall off, whereas FHA stays on forever. So there's a good factor depending on how long you're going to live in the house, okay? Unlike FHA, there is no upfront mortgage insurance fee. For conventional, there's only monthly. And the cool part about conventional mortgage insurance is it's based on your credit score. So the higher your credit score, the lower your monthly mortgage insurance. This is pretty sexy if you have a super high credit score, okay? So it's one reason to go conventional as opposed to FHA for high credit score borrowers. Conventional loans offer higher loan limits too. They go up into the 700,000s where FHA is under 500,000. Each is different for different counties, but that's about the nutshell number that they are. Check with your lender. Now, conventional loans normally require a 620 credit score, whereas FHA is 580, right? But conventional loans also have a little bit stricter rules on what your credit is, and your debt to income has to be 50% as opposed to the FHA's 55. So, choosing between an FHA loan and a conventional loan really depends on your financial situation, your credit score, your home buying goals, how long you're going to stay in that house, and which one is really going to be better for you. It just depends. You really need to have a lender who understands the pros and the cons between the FHA and the conventional. They put you together, they sit you down, and they run them side by side. And that way, you can take a look at both options and see what is the best scenario for you. You'd be amazed at how many times I get calls from high credit score buyers who go, yeah, I need an FHA loan. And I'm like, but why? So you just want to make sure that when you're looking at these, look at both options and take them side by side. And even though conventional might have a higher interest rate, your payment might be lower on a conventional loan because you have lower mortgage insurance, with the lower rate on FHA has higher mortgage insurance. So keep that in mind. There's pros and cons to both programs, and you need a lender who can put you in the best program for your scenario and understands the difference. If you have any questions or want more information, just reach out to us. We'd be more than happy to help you. Text us, call us, email us, chat us. Follow us on social media for more tips and tricks. And we're super excited to have you as part of the Slam Dunk Mortgage Team family. Stacy, Slam Dunk Mortgage Team, talk to you soon. Bye.